Hey, what's up you guys? Welcome back to another video. In this one, I want to talk about the inflation report that just released this morning. We got some intriguing news for ya. The US wholesale inflation has cooled down in July and it's making waves in both the economy and the stock market. Let's break it down on what it means for you and what to expect going forward. So here's the scoop. The wholesale inflation in the US, as measured by the Producer Price Index (PPI), increased by just 0.3% in July. This marks a notable slowdown compared to previous months, suggesting that the pressure on prices is easing. Why does this matter? Cooling wholesale inflation can have several significant impacts on the economy and the stock market. First up, the broader economy. Lower wholesale inflation generally means that the cost of goods for businesses is rising more slowly. This can help keep consumer prices in check and potentially reduce the cost of living for households. And therefore, the households will have more money to spend and invest, which is overall good for the economy. On the flip side, the Federal Reserve will be closely watching these inflation trends. If wholesale prices continue to cool down, the Fed might see less need for aggressive interest rate hikes and will start to decrease interest rate. Lower interest rate can make borrowing cheaper for businesses and consumers, potentially spurring investments and spending. Now, let's talk about the stock market. Investors often react strongly on inflation data. When wholesale inflation cools, it can lead to positive sentiment in the stock market. Because lower inflation can mean lower interest rates and better profit margins for companies. As a result, stock prices might rise as investors anticipate stronger corporate profits and a more favorable economic environment. However, it's not all sunshine and rainbows. History has shown that the stock market tends to go into a correction after immediate rate cuts. So this is because the market has been pricing in a rate cut, and therefore it's a buy the rumor, sell the news event. The market can be volatile and nobody can predict the future. Adding to the factors that geopolitical tensions and economic uncertainties might also influence the stock performance. Therefore, cooling inflation doesn't necessarily mean a rising stock market. It's just one of the factors that could affect the performance of the stock market overall. In summary, while cooling wholesale inflation is a positive sign for the economy and could lead to a more stable consumer price environment, it's important to stay informed about the broader economic landscape. For the stock market, the news can be a boost, but keeping an eye on other factors that might impact market performance as well. So what's your take on these inflation trends and their potential impact? How do you think they will affect your investments and the economy? Drop your comments below, I'd like to know. And thank you for tuning in. If you found this helpful, be sure to like, subscribe, and hit the notification bell so you don't miss out on our latest videos. With that being said, I'll see you next time.